Bitcoin has seen a huge rally upwards to 31,000. With CPI just around the corner, will Bitcoin sustain this price, or is a crash bound to happen? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you so much for tuning in. Hope you all have an absolutely fantastic day today. We're here to take a look at Bitcoin on the macro charts, the smaller time frame charts, and from an economic perspective, discussing CPI and of course upcoming data for PPI. We're going to be talking about the next move for Bitcoin, what the charts are currently looking like, and what we expect moving forward as per the relevant economic data. Before we get into it, smash the like button, hit the comment button, and subscribe. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, the relevant economic news, and relevant news events. No hype, no BS, no emotion, pure raw TA. That is the kind of content you are interested in. Join us on Telegram as well. It is a second link down below. You'll get access to charts, updates, videos, educational posts, news events, everything you need to keep on top of not only Bitcoin, not only cryptocurrency, but all of the relevant economic data as a whole. If you are interested in trading, you can join our VIP channel. We post trades of exact entries, exact targets, exact stop losses, with trade justification and exclusive analysis. Not only that, you'll also get access to our group chats, such as our trading chart and education chat. I'm in here daily teaching you guys how to trade, showing you the trades I take, helping you guys over your questions, and of course, all of our members are growing, developing, and building useful skills to be able to provide back to the community and share their ideas. If you're interested in joining over 600 members, go ahead and contact me via the pinned comment in the free channel. You can find more information. Let's get into the video, guys, starting off with the market data for today. Looking at July, we're currently down at 0.31%. Again, not too shabby. We're about 1/3 of the way through the month. We're not really expecting too much. It's going to be very interesting moving into the relevant data later into this month. As for 24-hour volume, we're sitting at 68 billion. You can see on the top left-hand corner, up around 57% for the last 24 hours. As for 24-hour liquidations, we have seen a surge to 67 million, and we're up around 39% in that last 24-hour block. Looking at those liquidations, we have a pretty large amount of liquidations actually in the last 24 hours, around half split between longs and shorts. If we look at the liquidation data, we did see a lot of shorts liquidate on the rally upwards. It did set a bit of a trap for these late longs, and of course, the late longs got slaughtered on the move back down. A huge move up, a huge move down, some very suspicious price action. Obviously, when we see these large moves, multiple percent, 2, 3, 4% move happened in a very large amount, very short period of time, followed by an equal crash. Generally, that is big players looking to trap or looking to liquidate positions. That is generally not what we call retail movement. That is institutional movement. That is big wallets, big players with a lot of money moving the markets around for whatever purpose they want. It could be reasons by it. Sometimes there's no reasons to it. But in this instance, is one of those scenarios where the price aggressively shot up, liquidated a lot of shorts, and then aggressively dumped and liquidated a lot of longs. Often when we see these more suspicious movements in price action, identifying that it is happening is all you need to do to be able to counter it. Because when you can identify what their objective is, you can trade against that objective and make profit, which we did on the way back down. Moving on, guys, let's go ahead and take a look at the DXY. DXY is moving toward the downside now. It has currently lost that low of support. We do expect the DXY actually to continue to our next order chunk over here, which is sitting around 101.6 to 101.8 or 100.8, sorry. And we do expect that to continue downwards now until CPI data. CPI data could be the final nail in the coffin that actually finally breaks the DXY downwards, or it could give it a second win, resulting in a move toward the upside. Again, the direction of which DXY goes according to CPI data is going to be heavily dependent on what the data does show. The data suggests that inflation is back on the rise, back rising, back going up. We can expect the DXY to actually move up. The inflation actually suggests that inflation is going down. We can expect the DXY to therefore go down. Of course, falling inflation is generally good and considered good for asset prices, not because inflation itself causes asset prices to go down. Actually, rising inflation is actually good for rising asset prices, but more or less the correlation between what inflation is doing and interest rates, right? If interest rates are going down, assets generally move up, okay? And for interest rates to go down, we need to see inflation pull back. Now, if we see a scenario where inflation is rising and interest rates aren't doing anything, that is very, very bullish because it means money is being printed and assets prices rally. But in this particular scenario, this particular environment we're seeing right now, if we see inflation go down, that is more leading to suggest that interest rates aren't going to go back up, and that could be perceived as bullish for the market. So we're keeping an eye on that, guys, as we go forward. Looking at it from a structural perspective, we do need to break above this trend line over here to actually see any sort of move upwards. I would be saying this trend line will inevitably break at some point. We're expecting this to break at some point, whether or not be lower or higher. I would say it would inevitably break. We are still watching over that, and that diagonal can extend for a very, very long period of time, but at some point it will break, and when that trend line breaks, we do expect the DXY to move back upwards. Moving on. Not too much has changed here for S&P. Looking at a bearish divergence actually developing over here. Resistance is resistance until it is not, and therefore expect a rejection unless we weekly close and break above, invalidating this level of resistance. Same goes for Dow Jones, guys. Not going to get into it too much. Same thing goes. Uptrending support line. Need to hold above that. Lose out on a weekly. We can expect the price to continue toward the downside. Let's go ahead and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 US in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So, there is a fair bit to talk about today, guys, but I want to start off by showing you guys the most important stuff, which is going to be the relevant economic data. So in about 36 hours, we're going to be having the CPI data come out. We can see the month-on-month inflation data over here. We can see core inflation, and we can see year-on-year inflation. Like I said before, if we do see inflation drop, we can expect the markets to have a bullish reaction. So we will expect Bitcoin to actually rally. Now, if we see a significant fall in this inflation data, that would suggest a larger move is coming for Bitcoin. If we see a neutral move, it's going to be here or there. If we see, of course, inflation rise upwards, we're most likely to see Bitcoin correct. So before we get into anything, it is very important to note the move that Bitcoin decides to take is going to be heavily determined on the inflation data itself. If we go ahead and pinpoint that in, if we see on a horizontal line here, we have the inflation data coming out around this vertical line. So we do have quite some time now to make a move, but it's highly unlikely that Bitcoin is going to make a significant move under or above this level within the next few hours or next 36 hours until CPI data. It's highly likely CPI data is going to be the trigger for that next move. And therefore, we're not going to try to talk too much about what's happening between this range today. We're going to talk more about what will happen if we break above this level / if we break below this level, as those are the 2 key significant levels. So let's discuss that. What will happen to Bitcoin in the smaller time frame if inflation data comes out bad and we fall below this major horizontal support? So we go back, we can see this level has provided a decent amount of support for quite some time now. It's actually been consolidating above this level ever since late June. So we've been about 20 or so days now, been consolidating above 30,000 to 29.8k. This is a significant level of support in the smaller time frame, but 30,000 is also an incredibly important support on the higher time frame. If we take a look at 30,000 over here, we can see the $30,000 range is significant on that daily, on that weekly, and even on that monthly chart. So 30,000 is a major level of support and has to be defended for the bulls to push the prices higher. But if we take a look at our volume range over here, we can see specifically if we lose under this level, if we drop below our 29.8k support, we can see the volume range drops off significantly, kind of picks up again around 29k, but more or less drops off until about 28.4, which is going to be this local high point as represented by this retest over here and back over here in early May and late May. So as we can see, the VRPV starts to drop off to this point. It slowly, gradually builds up and it reaches a chunk of support around 29,000 and a low of around 28.4. So if we do lose this 29.8k level, if we close a 4-hour candle below, the reason I say 4 hours is because if we look at this range, we can see it's a 20-day range. Well, it's not quite over a month, it is over a week. If we look at our prior weeks, we have yet to close a 4-hour candle below. We've closed hourlies, we've closed 2 hours, we've closed 10 minutes. We haven't closed a 4 hour. So we're looking for scenarios in which things would occur that haven't occurred before that could potentially increase the probabilities of a directional move. So remember, time frame is relevant to some degree. We can use time frame to perceive strength. If we generally close a higher time frame candle over a trend line or under a level of liquidity, it shows more strength or more weakness in comparison to if it was a smaller time frame close. So in this instance, I'd be looking for a 4-hour candle close under. In the off chance that inflation data does come out and the price nukes, I wouldn't be waiting for a 4-hour. I'd be jumping in with a tight stop loss just above or just above this trend line again, because it's very unlikely if inflation data comes out very bearish and the price nukes, this level is a range of lower resistance and therefore volatility could increase and the price could actually drop quite quickly. Now the same goes for the upside. If we take a look at the bullish scenario over here, and we look at our bullish trigger being this 30,800 to 31,000 level. In fact, if you remember back to our video 2 days ago, we said we were consolidating in a symmetrical triangle pattern. A triangle pattern which is a neutral pattern. We have a downtrending resistance, a uptrending support. We said that the pattern itself was neutral, although it had a slight advantage toward the downside as we entered downwards, right? It gives us a very slight advantage toward the downside. However, the pattern itself never actually broke downwards, and therefore we never saw the move toward the downside. And that's okay because it's a neutral pattern. We also said the direction of which the pattern breaks is the direction of which the price will move, because when it comes to these neutral patterns, the direction of which the price breaks is generally the direction of which the price ends up continuing. If we take a look at the measured move from this structure, we saw that the measured move from this structure took us into the $30,800 to $31,000 range as completed. So the breakout from this symmetrical triangle has now completed. We can go ahead and delete that downtrending resistance as has now completed. However, this uptrending support is still a relevant support, and we'll still be watching that for a potential trigger, as a loss of that support level could be an early indication that we'll be pushing into and potentially down from that 30,000 to 29.8k level. Okay, moving on upwards for the bulls, we can see we had a pretty strong move upwards in the last 24 hours, and I would like to say that no matter what happens to the price between this upper red zone and this lower red zone, we should not be taking anything that happens here too seriously. Take it with a grain of salt in terms of higher time frame direction, as this right here is nothing more than a horizontal range, a chop zone, and in chop zones, in horizontal ranges, it is perfectly normal for prices to bounce from the bottom ends to the top ends over and over and over. And therefore, although this move is awesome, although it was a strong move, it doesn't really change the market structure, and it doesn't really show any significant strength that we didn't have 2 days ago or even a day ago. In reality, it hasn't really done much, right? We just saw the price go up and reject from a major resistance. But that all changes if we can start closing and getting above this upper resistance level. I would be looking for, once again, a 4-hour close above 31,000 to signify a move upwards. Here becomes the interesting thing. Even if we break above this level, we have multiple points of resistance. The main resistance being this uptrending diagonal trend line, okay, as represented by this trend line, and this lower support level right over here. We can see we are on a rising channel. This is a bearish structure, and therefore this diagonal level, if retested, will act as support, as a resistance, sorry. And number two, the $32,000 level to $31,300 level acting as a major resistance. So even if the price moves up over here, we don't really flip macro bullish again until 32k breaks. If 32k breaks, that is when the next move on the higher time frame will continue upwards. Okay, let's talk about that. Let's talk about 32k. Why is 32k important? So if you look back at this chart, we had this chart for a very, very long time. I think we've had this chart up ever since all the way back in early March, I believe. It identifies basically key directional biases we're looking at as per where the price is at any particular time. As you can see, we are in that bullish weekly phase over here for the price action. The macro bullish phase occurs above our 32k level. That has always been the case. However, a break of the monthly candle above 30,000 facilitates a macro reversal in the trend. It says, okay, we're in a position that can facilitate a macro uptrend, but the macro uptrend doesn't really kick off per se until 32,000 breaks. And that is, of course, going to be our resistance point right over here as per 32,000. To further go ahead and analyze that, if we take a look at our VIPV on the right, we can see the VIPV significantly drops off in this range. What we've seen prior is a whole heap of volatility over here, very rapid price action, very strong move toward the downside. That is suggestive of a low resistance range. In low resistance ranges, the required volume to break through decreases. If required volume decreases, but overall volume increases, volatility increases, and speed of price action increases. Expect the price to be quite violently aggressive toward the upside if we break above 32,000. Again, determining where we go is heavily reliant on CPI data, and of course, we'll find out in a few days. So for now, on the daily chart, I would not be looking for a break upwards until 32 occurs. 32k breaks, by all means, we'll go higher. At the moment, I'd be slightly more bearish from a perspective of risk return. Not from a perspective of anything else, but from a perspective of risk return, I'd say the favors are slightly more into the downside, and we can realistically go down a little bit more as we have 20 days to do so. We'll discuss that now. So why could we go a little bit more further down, and why is that an okay thing to do? So first and foremost, like we said already, we do break downwards. We're looking around 29,000. We're looking at a low of around 28.4. And 28.4 is really that low point where the price can retest and still remain relatively bullish on the weekly chart. Anything below 28.4, that's when we kind of become a little bit sketchy on the weekly chart. And the weekly chart goes from a strong uptrend into a weak downtrend or a weak uptrend. So we'll discuss that. Let's take a look. 28.4k is significant for the bulls to defend as it represents our upper band of the Gaussian channel. The upper band of the Gaussian channel represented by this red line is sitting at around 28.4. But it is significant more so than just being a number. If we take a look at our 4-year cycle here on the left, and we bring up our Gaussian channel on the weekly on the right, and I'll go ahead and go Ichimoku Cloud, and we take a look at our prior scenarios, the prior scenarios being our 2015 scenario and 2019 scenario. And we'll go ahead and bring both those scenarios up and you'll see it over here. In the 2015 scenario, we broke the weekly candle over that Gaussian channel. Fantastic stuff. We saw it over here. Okay, if we line that up on the chart, if you look at the chart right now on the left, you're going to go ahead and see a downward dotted black line. Our vertical dotted line, you'll see it move. I just want to make sure you can see that. Okay, you can see that. That is corresponding to where we are on the right-hand side, which I'm circling now. So you can see the moment we broke above, we actually had this break up on that chart right over here. We had that break over that 30k level. Here is a significant, but not the 30k level, that horizontal support level that will sustain. I'll go ahead and reiterate this really quickly for the new viewers. Every single bear market, every single bull market, we have a base of support. You can see the base of support over here. You can see the base of support over here. And you can finally see it at 30,000 in this scenario. When we drop below it, we capitulate to the bottom. Huge crash, huge crash, huge crash. Okay, we reach the bottom. Awesome. When we continue upwards, we reach that trend line once again. This trend line provides a massive point of resistance and a trigger point for the chart to flip from weekly bullish into macro bullish. And that is where we currently are if we're talking about the overall narrative of the price action. So moving back to the Gaussian channel, if we take a look at where we're currently sitting and what we have seen before is we have seen the price break upwards. When it breaks upwards, we actually never end up seeing the price go back under the Gaussian channel only until after we have reached our dotted trend line on the 4-year cycle. If we take a look at the dotted trend line, this represents the first dead cat bounce high. Awesome. First dead cat bounce high. The price broke through the Gaussian channel here. It went upwards to retest that. Right over here, you can see a high point over here and then rejected. Awesome. That is point number 1. Point number 2 is in 2020, we saw another scenario happen. In this instance, we saw the Gaussian channel actually be lost for a second time. But watch where it was lost. We broke up from the Gaussian channel, watch a dotted trend line on this candle over here, right over here. We continued upwards until we reached the dotted trend line, right over here. And after the dotted trend line, we broke back down. And that's perfectly fine because when we came back down, we actually retested our support as support. So moving into this scenario, the reason I say 28K is a level that needs to be held was if we want to see the scenario that played out 2 times before happen again, 28K needs to be defended. It can be retested, but it needs to be defended. The best case scenario would be a retest and a continuation upwards to 48K, retesting this dotted trend line before finally another collapse before we continue upwards. That would be the best scenario as per the 4-year cycle, as per the relevant data we have seen on the chart in the prior scenarios. Now, of course, that retest is not required. We don't actually need to come down. We can continue straight up. We can break right through 32,000 and get the ball rolling. We don't need to see the retest. So when we're looking at the weekly chart, the weekly chart is undoubtedly bullish, right? It is undoubtedly bullish over here. We're above that weekly Gaussian channel. The price action on the macro is looking really, really good. We're above the 50 EMA. We're above all our smaller time frame moving averages. We have positive momentum. If we go ahead and bring up our RSI over here, we can show you we have positive momentum and we'll represent that positive momentum. Of course, we have overall uptrend and momentum, but if we go a step further, if we look at momentum shifts, we've broken above that key point on the RSI, which is going to be about 60 point on RSI. We've slightly broken above it, representing a positive shift in momentum. All we are seeing now is compression, consolidation, indecision below a major resistance. And while we see indecision, compression, consolidation under resistance, automatically, this should be a sign of a rejection. It should be a sign that, okay, the risk return is now over in favor. We can expect a pullback to occur. We have to position ourselves in case that pullback will occur. It doesn't mean jumping into a trade now, waiting for a pullback, but it means identifying the key levels on the chart in which, if lost, a pullback will then occur. Remember, I get this a lot. Your job as an analyst or a trader or an investor is not to predict the future. You're not predicting the future. You're using data, the metrics, volume, volatility, speed, velocity, all that kind of stuff, according to the charts, to then paint a narrative of what is happening and what could happen. And then with your scenarios that what could happen, you apply parameters, you apply triggers. What would actually cause that scenario B to occur? What would cause scenario A to occur? What do I need to see happen from the metrics? What do I need to see momentum do? What do I need to see the price do? Where do I need to see the price go before that triggers? So a lot of things happen that when it comes to trading, and the worst thing you can do is categorize yourself as a bull or categorize yourself as a bear. Be open-minded, be adaptable to price action, and keep your objective analysis in check. Do not hold biases, do not try to be correct. Your job isn't to be correct. Your job is to make money, guys. That is what you're doing. Don't let your ego get the best of you. It's not about being correct. It's about making money. And to make money, you have to have plans. And to have a plan, you need to be objective. And to be objective, you need to drop your emotions, desires, and wants. What is the chart suggesting? When will these moves occur? That is your opportunity to make money. And that is what you need to do. So looking at the chart one more time. When will the bears take control? Well, a loss of 29.8. When will the bulls take control? A break above 31K. What is happening right now? Horizontal consolidation, neutral pattern, a chop zone with large volatility moving into CPI. Wait for the move, we've planned the move, and then we execute the move. Thanks for watching, guys. I hope you enjoyed. If you've got any questions, let them down below. If you've got any suggestions for our next video, drop them down. We'll catch you guys in the next one. Cheers.